Ever found yourself daydreaming about investing but didn't quite know how to get the ball rolling? Well, you're not alone. Welcome to Finance Finesse, unveiling the beginner's path to investment success. Today, we're going to demystify investing because, let's face it, the world of investing can seem like a maze. But it doesn't have to be. You see, investing isn't a privilege reserved for the rich and famous. Nope. With the right knowledge and strategy, anyone, yes, anyone can grow their wealth. Imagine a future where you're not just scraping by, but thriving. That's the power of investing. It's about making your money work for you, rather than the other way around. So, whether you're saving for that dream vacation, planning for retirement, or just want to build a financial cushion, investing can be your ticket to financial freedom. So buckle up, because we're about to take a thrilling ride into the world of investing. Scene script. First things first, let's get familiar with the various types of investments out there. Imagine you're in a candy store. There's a plethora of options and you can't decide what to pick. That's kind of what investing feels like. But don't worry, we're here to help you decipher the different types of candies, or in this case, investments. Let's start with the first type, stocks. Now, buying a stock is like buying a tiny piece of a company. You become a shareholder, owning a slice of the company's future profits. Stocks are a bit like roller coasters, thrilling, but they can also give you a bit of a jolt. They're great for long-term growth, but remember, they come with their fair share of risk. Next up, we have bonds. Bonds are like that reliable friend who always has your back. When you buy a bond, you're essentially lending your money to a company or the government. In turn, they promise to pay you back with interest. Bonds are generally less risky than stocks, but offer lower returns. And then, there's real estate. Buying property is another way to invest your money. You can earn a profit by selling it later for a higher price or rent it out for a steady income. Real estate can be a good investment, but it requires a bigger initial investment and a lot of management. Lastly, let's not forget about mutual funds. These are like a buffet of investments. They bundle up stocks, bonds, and other assets into one package. Mutual funds are managed by professionals and are a good option if you want diversification, but don't have the time or knowledge to manage your own portfolio. These are just a few options. There are many more out there like ETFs, index funds, and commodities, but we'll save those for another day. Now that we know our options, it's time to set some financial goals. Ever thought about what you're saving for, a house, retirement, or maybe that dream vacation? Right there, you've got yourself the cornerstone of your financial journey. Goals. Clear, well-defined goals are like the North Star in your financial universe, guiding your investment decisions and keeping you on track. Think of goals as your financial destination and your investment strategy as the roadmap to get there. Whether you're saving for a down payment on a house, stashing away for your golden years, or putting away a little something for that dream vacation, each goal requires a different strategy. Some might need aggressive investments, while others call for a safer approach. Your financial goals are unique to you, and that's what makes your investment journey exciting and personal. So take a moment, sit down with a cup of joe, and really think about what you're striving for. Remember, these aren't just numbers on a spreadsheet, they're your dreams, your aspirations. With our goals set, it's time to talk budgeting. With our eyes on the prize, it's critical to keep track of our spending. And that, my friends, is where budgeting comes in. It's not as scary as it sounds, I promise. Budgeting is simply about understanding where your money is going and making sure it's working for you, not against you. You see, every dollar you save is a soldier in your wealth-building army. So how do you rally the troops? You start by monitoring your spending habits. Yes, that means keeping an eye on those late-night online shopping sprees and those extra-large lattes. Then you trim the fat. Cut down on those unnecessary expenses. Do you really need that gym membership if you only go twice a year? Consider cheaper alternatives, or even better, find free ways to enjoy life. Remember, it's not about depriving yourself, but rather making mindful decisions. Every cent saved is a cent that can be invested. Now let's delve into a topic that can make or break your investment journey: risk. All investments come with a sprinkle of risk. But don't fret, we have a secret weapon: diversification. Now you might be wondering, what on earth is risk in investing? Well, when we talk about risk, we're referring to the possibility of your investment losing its value. You see, the world of investing is a bit like a roller coaster ride. There are ups and downs, twists and turns. One moment, your investment may be soaring high, and the next, it might take a nosedive. That's risk for you. But hey, don't let that scare you off. Risk is just part of the game, and the good news is we can manage it. How, you ask? Well, through something called diversification. Diversification is a fancy term for not putting all your eggs in one basket. It's about spreading your investments across different types of assets, industries, and geographical locations. The idea is simple. If one of your investments isn't doing so hot, the others can help balance things out. Think of it like a buffet. You wouldn't just pile your plate with macaroni and cheese, right? You'd want a little bit of everything. Some veggies, a slice of roast beef, maybe even some sushi. In the same way, a diversified portfolio gives you a variety of investments that can work together to help you reach your financial goals. It's important to remember, though, that diversification isn't a surefire way to prevent losses. It's more like an insurance policy, reducing the severity of potential losses. It's also not a one-size-fits-all strategy. Your diversification plan will depend on your financial goals, risk tolerance, and investment timeline. So there you have it. Risk and diversification, two vital concepts in the investing world. Remember, investing isn't about avoiding risk, but understanding and managing it. With a well-diversified portfolio, you're not just spreading your risk, but also setting yourself up for potential success. Risk handled, let's move on to a little magic trick called compound interest. Ready for some financial wizardry? Meet compound interest. Picture this. You've got a magic money tree, and every dollar it drops grows into another money tree. That's compound interest in a nutshell. Your money making more money. You see, when you invest, your money earns interest. But here's where the magic happens. That interest then earns interest of its own. This cycle repeats, and your wealth grows like a snowball rolling down a hill, getting bigger and bigger over time. It's a slow burn, though. It might feel like watching paint dry at first, but give it time. The longer your money can work its magic, the more powerful compound interest becomes. It's not about getting rich quick, it's about growing steady wealth over the years. And remember, every little bit counts. Even small investments can grow into big returns with the magic of compound interest. With compound interest on our side, let's discuss the importance of time in the market. Investing is a marathon, not a sprint. So let's talk about the importance of time in the market. Many folks think they can outsmart the market, trying to predict the perfect time to buy low and sell high. But let's get real for a moment. No one can predict the market consistently. It's like trying to catch a falling knife, and it often leads to more harm than good. Instead, the smarter strategy is to focus on time in the market. This means staying invested for the long haul and allowing your money to grow over time. You see, markets may fluctuate in the short term, but historically, they've always trended upwards in the long run. So, don't fret over daily market movements. Instead, keep your eye on your long-term financial goals. Your patience today can lead to significant wealth tomorrow. Now that we've covered the basics, remember to seek professional advice if you need it. Congratulations! You've just taken your first steps toward investment success. We've journeyed together through the vast landscape of investing, unveiling the basics, exploring various options like stocks, bonds, and real estate, and setting clear financial goals. We've tackled budgeting and understood the significance of monitoring spending habits. We've also dived into the deep end with risk and diversification, learning that every investment has its share of risk, but a well-diversified portfolio can help minimize that. We've marveled at the magic of compound interest, realizing the power it holds to significantly grow our wealth. And remember, investing is about time in the market, not trying to time the market. Let's not forget that investing is a journey, not a race. Stay patient, stay informed, and adapt as the market evolves. Thanks for tuning in. Don't forget to hit that subscribe button for more finance tips and tricks.